The danger with consistent wins is it starts to bring the ego into play if you get too confident, and you eventually can reach a stage where you feel that everything you touch turns to gold. Losses are where the true value lies. The moment you lose a trade, stop. Examine that trade. It's not the market's fault, because the market will be what the market will be, but instead it's my fault for not navigating the market effectively. You must not let one misstep or one fall make you fall all the way back down the mountain. So I've just arrived back in the UK to surprise my family, and I've got a vlog on the way for that as well. But just as I arrived, I've had my first losing trade in quite some time. And I think this is quite a good time to do a video regarding the damages of a win streak as much as a losing streak. Now, I think in these moments, it's actually very important in a trader's career to understand what you can learn from these situations, and furthermore, how damaging it can be to go from a series of consistent wins to suddenly suffering your very first loss. I find it very dangerous if you do not have your ego and yourself in check, because it provides a beautiful opportunity to learn from what may have gone wrong. And I think there's great value in suffering a loss, specifically after a series of win streaks, because you've made some form of decision. And of course, the market may play a role, but something has essentially gone wrong to end that winning streak. And it's a very important moment traders must look at to understand how to improve in the future. And this is very important for every aspect of the trades we take. You know, it's not just the historical trades that we should be seeking to kind of reevaluate and find value from, but simultaneously, we need to look at the present trades. So this video may come at the correct time for many people, because no doubt at some point one of you will lose. If not, you may have just lost, or if not, you may currently be in a loss. So the reality of trading is you always lose, and it's never something I will shy away from. In fact, it's not actually a big loss that we've taken. If going back to our previous YouTube video, breaking down the crypto market, we wanted to see BTC fall from $124,500 and begin making its way down to around 108K to the lower end of 100K. And that's been flowing rather beautifully so far. However, in between that, I was looking for a long entry back up to $120,000 to then eventually lead down to 100K. And I still think that's going to happen. But taking that long entry, we had Ethereum, which we closed in a profit. We captured F almost up to all-time highs, got out for a very nice profit. But BTC I held. And this may be the key for me to understand what may have gone wrong, because holding BTC led to a loss. Unfortunately, the Ethereum profits from the long leverage position managed to counteract, so I still ended up profitable. But something led to my first loss in a while. And therefore, I think it's quite valuable to do videos present in the moment using real life examples that I'm currently experiencing right now, because there's no better education than realistic scenarios that we ourselves are experiencing that no doubt we can all relate to in these moments. Now, I don't know about you, but a lot of people have been saying that the markets are seemingly a little bit harder this year. Now, I kind of agree, but I kind of disagree. And maybe you feel that way, maybe you disagree too. I would say the markets haven't really got harder or more difficult, but more so the markets are not as fluid this year, it seems. We're not really getting that fluidity on a consistent basis where you're getting those continuous daily movements. It seems that we're in this never-ending fundamental war of constant yo-yos back and forth, a lot of consolidation, a lot of choppiness, and moves are really taking longer than usual to kickstart. And this is especially the case for crypto. We get one decent movement, next thing you know, we're consolidating for hours to days on end. Then another movement comes through and we go back into more chop. It's just bang, 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 bang. It can be quite tedious. So going into my example, and I think it could tie into the current market dynamics, the reason I haven't lost a trade in so long is because once that trade has gone into profit, using my experience from what I've just evaluated right now, it's very important in this moment to not just brush this off and go bang, next trade. No, you need to look at your trades, examine yourself and examine your decisions to try and identify what could have gone wrong. Now, looking at my previous few trades, which have all come through very well, one of the key characteristics and traits of every one of those trades was once they achieved a decent profit, or even hit a modest level of support or resistance where the market had a decent probability of reversing, I would just close out the trade, take the profit onto the next one. In this particular trade for Bitcoin, I went into a very good profit, almost achieved my target, and then we rolled back down. Now, I didn't add any more positions, but this was the one trade for pretty much quite some time that I actually held after going into a good profit, pursuing more. So examining that from the offset, that could already be a telltale sign of what may have gone wrong, because I was trying to pursue more than what the market may have necessarily been willing to provide in that particular circumstance. Now, this is just one example, but I'm essentially doing this video live in the moment of experiencing this loss to give you guys an understanding of what to look for and what sort of practices you should be doing in these situations. And maybe traveling plays a role in it. I doubt it, because I took the trade before traveling and it actually went into a profit whilst I was on the flight, which is where I closed Ethereum in the profit. But BTC, from what I can see so far, there were a few telltale signs that a reversal was possible. But the most important aspect of this, for me at the moment it seems, is I held the trade longer than I probably should have done. And this also goes into understanding the current market dynamics. And something we often do as traders is force our trades, so to speak, to hold out longer than they really should be. And sometimes ignore potential signs of where danger can occur, or just a simple reversal. Remember, it's never really a danger if you've calculated your risk beforehand. And this is the crucial element of risk management. Because I managed to control my risk and manage it properly, the loss has not caused me an actual loss. It's just left me with slightly less profits than what I would have had overall. And this comes down to, obviously, meticulously planning risk management. Now, I personally feel, and this may be very relatable to many of you, but consistent wins for me are equally as dangerous, if not more dangerous, than consistent losses, because they can both lead to the same outcome, which is blowing your account or losing everything. Now, the danger with consistent wins is it starts to bring the ego into play if you get too confident. And you eventually can reach a stage where you feel that everything you touch turns to gold. Now, this in theory is a good mindset to have when trading crypto or trading Forex or trading stocks with leverage, whatever it may be. There must be an element of confidence to your trading. But having consistent wins almost builds this psychological buffer, so to speak, of confidence, which can sometimes skew your perception of reality and almost damage you significantly when you eventually take a loss, because you almost enter this completely locked-in phase and almost a mental bubble where life is sunshine and rainbows, if that makes sense. And suffering that first loss can be incredibly damaging because it has the capability to completely throw you off your game if you allow it to. So because this is something that right now in this moment I'm currently experiencing, which is not necessarily anything damaging, but more so because I've gone from a series of wins to losses, I am now in that stage where I have two simple choices here. I can allow that loss to throw me off my game entirely, or I can allow it and understand that it's a simple part of the overall progress and that losses should not be feared. But it can be very damaging if you do not learn from it and allow yourself to get an ego during the wins and simultaneously allow it to damage your ego when you suffer a loss. Because a lot of us want to achieve this global trader status where we just never lose, we're consistently winning back and forth. The reason this loss has not damaged me, number one, is because I did not over risk and get too cocky when the series of wins came through. I didn't go from win, win, win and go, that's it, now we're going to go in heavy. In fact, I kept the risk the same and used the stop loss, of course. But if I had gone in too big, and of course it's normally the big ones that you go into that end up losing, I would be in a very different situation right now. It's incredibly important as traders that we continuously track our progress. We continuously learn from every decision and action we make in the markets, because losses for some reason in trading are really detrimental to us mentally and really to our trading process. But the truth is, losses will only damage you if you allow them to. And this is where, of course, beautiful risk management comes into place. You should never be afraid to take a risk in the market. And in fact, if you think about it logically, every single position you take in the market is a risk. And theoretically, the entire game of trading is entirely based on taking a risk. Every trade you execute has a correlated risk associated with it. But the only way to really diminish that risk as much as possible is by controlling how much you physically risk in that particular play. So you could logically take a trade at an area which seems incredibly risky, but the level of that risk is only really down to how much you've executed and put at risk, if that makes sense. Now, one of the first things I would say is really, really important after suffering a loss, specifically after a win streak, is not allowing your ego to consume you and looking to rush back into a trade. The way we're psychologically coded as human beings, whether it is after a losing streak or a winning streak, realistically, when you take a loss, one of your human instinct natures from the offset is to jump back into the market and try and recoup those losses immediately. But the likelihood is you would be making that decision in a very irrational mental phase of your life and a very irrational phase post-loss. Losses can impact you psychologically, and if you try to jump straight back into the market, there's a significantly higher likelihood you would be making that decision with not the utmost of clarity in play. Very important you understand, one of the best things to do is just take a step back, take a breather, reassess, and allow the market to move before making the next decision. It's often best to wait at least 24 hours before looking to jump straight back into the market. Because whilst your bias may be correct, and using another real life example, the position I've taken, I personally feel is the correct bias overall. And irrespective of being stopped out, I believe the market is going to go to where I was originally targeting before getting stopped out. But the last thing I should be doing here, and this has come from years of experience, if I jump back in now, the likelihood is it's being done so with a slight emotional aspect factored in, which means the clarity is going to be diminished, and the likelihood is anyone that's just suffered, very important as well, put yourself in the shoes of other traders. I always say this, but in this moment, am I the only person right now as BTC dropped that got stopped out of a trade? Very unlikely. There's very likely a lot of people that have just been in the same position that got stopped out. The next thing to do is go, right, what would those traders likely be doing in this moment? They would be looking to revenge trade. They would be looking to dive straight back into the market, which can almost give you an idea from the offset that if that's what the collective herd would be doing, and if you are internally feeling like you have this urgency to jump back into the market, you should listen to that urgency and listen to that impulse feeling. Because you must remember, most traders act off impulse. They allow that impulsive reaction to take control. They are not able to take control of it, and they make decisions based on those impulsive reactions, which is what leads to worsening losses. And this is one of the largest contributing factors that can turn a series of consistent wins into a series of consistent losses and very quickly eradicate all of your gains. So often, taking a breather and combating and fighting that urgency to jump back into the market will save you hundreds, thousands, hundreds of thousands, if not millions over the long run by simply controlling those urges. Trust me, they're a lot more dangerous than you think, and you won't realize it in the time until you fall victim to those impulses and keep jumping into the market, trying to catch that falling knife or trying to short that pump. Before you know it, you've done so many trades in that overall area that you haven't even realized you've obliterated all of your gains. Very important you understand that. Now, the next thing I would say that's equally as crucial is, of course, the ego aspect of losing a trade. Now, you should not let this get to you, nor should you have an ego in the first place when it comes to trading. But after losing a trade, there is also not only the ego damaging element that comes into play, but also the strongest, most potent part of this formula is the byproduct of self-doubt, and almost starting to doubt yourself and your capabilities. Instead of doing this, it's far more important to understand that losses are a mere byproduct of trading. You cannot escape them, and they will never ever be avoidable. All you can control is the risk. So it's very important not to doubt yourself in these situations as well, and this is also why risk management is absolutely crucial in these circumstances, because the more you lose, specifically the more you lose outside of what you should be losing, the more damaging it is to you emotionally and psychologically, and can cause you to really hate yourself in certain circumstances. I've been in this situation many times where, of course, I'm sure you guys have done this as well. You have a series of wins, you get too cocky, and then you just go balls deep on one trade, and of course it's that one trade that doesn't work. And once that trade is stopped, or you've blown your account or lost way more than you can afford to lose, you end up hating yourself and you hate your guts, and it takes a very long time to get back into the market. Which leads me to point number 3. If losses cannot be avoided and all you can do is control your risk, then you must understand that losses are just a simple speed bump along every step of the way of this overall trading journey. The best way to understand the trading career that you are embarking on is to understand that you are really and truly on a never-ending road. There is no real end destination, but you are also on a road which can be considered a straight line with a load of speed bumps along the way. The only problem is you do not know where those speed bumps are situated. They do not appear on your maps. They don't appear on Google Maps, Waze, whatever maps app you use, or whatever satellite navigation system you use. The speed bumps are not predictable. Therefore, if you simply know that along this route, which is never really ending from A to Z or A to B, the speed bumps will appear at some point. Therefore, knowing that you can't predict where those speed bumps will occur, that could potentially be very damaging if you do not pre-anticipate those, then you must simply make and take the measures ahead of time to understand when those losses come. Inevitably, when you least expect them, you must be prepared from the offset. And the best way to do that is to maintain a continuous level of risk management, sticking to those principles every step of the way. Now, the next thing to do is go back to the very beginning of what we covered, which is, of course, learning from these losses. Do not brush them off immediately, because there is so much value, and you will arguably, in my opinion, the best way to progress in trading is to lose money. The best way to progress is to lose trades. Whilst there is value in winning trades, the losses are those that can damage you more than the wins. And whilst the wins are equally as fatal, losses are where the true value lies. The moment you lose a trade, stop. Examine that trade. Look at where you executed and go back and redraw, reanalyze, understand the existing analysis, and then go back and redraw and see if you would have taken the same trade. Now, in this particular instance for me, from what I've gathered and what I've reanalyzed, and this is the first thing I've done, I redrew everything, reanalyzed. Was there anything I physically missed? There was an element I missed which could have been factored into taking profits, but for the execution itself, from what I can see, I would have still taken that same trade. And there will be times where no matter what you do, no matter how perfect the setup looks, the market won't respect the full scope of the analysis. And because the trade worked out, it's not necessarily the execution phase that I have identified that was the issue. It was the exiting phase. And that, for me, and what I feel for this video, is a very valuable factor to consider. Sometimes you will get the best entries and the trade will play out. So it's not always the entries that can be horrendously wrong, because trading is a three-stage process, essentially. It's the analysis, it's the execution, and it's the exit. And there are multiple factors that can go into this, and you need to examine what aspect of that trade is what went wrong. Was it the exit, was it the entry, or was it the analysis? So theoretically, in this particular example that I've gathered, and I'm basically sharing with you live in the moment as it's happening, what's running through my head, what I'm doing, and what I'm going to do to ensure I can minimize this as much as possible moving forward, specifically in the current market conditions. Which brings me to my next point, understanding market conditions. From what I have identified from this particular trade, is I've tried to hold a swing position in a market that is really choppy, really messy, and not really providing optimal swing conditions, which means as traders, sometimes we feel our strategy may not truly be working, but the strategy may work just fine, just not very well for those current market conditions. Therefore, now that I have seen my first loss in a while, the one trade I try to hold as a swing, I'm going to take that as a clear indication for now if taking a series of intraday to intraday trades, and when I say a swing, I mean I've gone into profit, held it back down, and then it's gone up again, and then gone into a loss. Taking that piece of information and knowing that a series of consistent wins has stemmed from simply getting in and out whenever the market provides that initial move is clearly the current winning formula in these market conditions. And you should not try to fight the market dynamics that are in play, specifically during this year. And I do see a lot of people saying this, 2025 has been really hard. It's not really hard. It's more so, it's not as easy so to speak, because the fluidity, the movements, and you're not getting clean entries and exits in terms of sometimes the market is going to be a bit more choppy, or you're not getting those phases where you really execute a trade and they often just flow beautifully. There's a lot of choppiness, there's a lot of mess that's been occurring this year, and it seems to be more due to the fact that maybe Trump is just causing a lot of chaos overall, and generally a lot of fundamentals that come into play. But you must remember, we have a choice as traders in these moments to make an excuse or blame the market and say, you know, it's not fair, it looks so good. The reality is my trade loss. So I'm going to take responsibility for that, and I'm going to understand that it's not the market's fault, because the market will be what the market will be. But instead, it's my fault for not navigating the market effectively, so to speak. And it takes a real lack of ego to look within and make that decision, in all honesty. It's very hard to do that for many people because most of us don't want to take responsibility for our actions or our decisions. But when you understand it's a mere byproduct of the game, you're less inclined to find it damaging as long as you don't allow it to damage you. So of course, the topic of this video is the danger of a loss after a series of wins. So everything I've just mentioned is exactly what I do after being in these predicaments to ensure that I minimize destroying the flow I've built. Because a winning streak is really where you've developed a flow state with the market, where there is a higher level of confidence. Therefore, you want to still maintain that as much as possible. And the goal is not to let those losses break you from that flow state, which can be very easily done if you do not learn from it and then go off the basis of a loss. The problem is a flow state with wins can very easily turn into a flow state with losses. The goal is to remember that speed bump must not be the end of a beautiful flow and beautiful progression. It should not be where everything goes downhill. And you must remember this journey as a collective is an overall, shall I say, upwards journey, climbing a mountain. You must not let one misstep or one fall make you fall all the way back down the mountain. Imagine climbing Everest where you know there is a very high risk of falling. You must ensure that every time you meet an obstacle, every time you meet a hurdle, or even if you slip, you are putting the best measures in practice to move to the next step. Imagine climbing Everest and you slip, and you just go, oh, it was nothing, I'm going to do it again. I'm going to go and tackle that same obstacle that presents itself on the next level higher with the same approach. It's not going to end well, and you're eventually going to fall all the way to the bottom of Everest. And we don't want to do that because we are on that straight road that never truly ends, and all we are here for is longevity. Therefore, you must remember that the aim of the game is survival, and you must not let those small speed bumps along the way detriment you and cause a significant amount of losses. So what I'm also going to be doing moving forward, I'm going to be traveling over the course of the next few weeks, but of course I'm thoroughly enjoying the YouTube content that we're doing, which means using some real life examples of winning trades or losing trades or whatever I am experiencing as a trader, I feel could be quite valuable to provide as content live in the moment. And of course, it doesn't matter where I am, what my surroundings are, or wherever I may be, I will ensure that I'm always delivering content in every way, shape and form. So I think content like this, alongside the outlooks and everything else we do, is very valuable. But a lot of what we've covered is general, overall trading psychology. But using real life examples, I think, is the best way to relate to you guys so we can learn together in the process. As an example, if I've gone through the situation, you may have been in the same trade as me, so it could be reaching you at exactly the right time. But remember, the goal here is longevity and survival, and wins are just as dangerous as losses if you allow it to consume you. So just remember, they will always come, it will always happen. It's how you navigate them that will really determine how long you survive in this game.